Convergence Partners, an investment management firm focused on the telecommunications, media and technology sector in Africa, has announced the launch of a fund dedicated to the sector in Africa. Earlier, I caught up with Brandon Doyle, CEO of Convergence Partners, for more. Brandon, thank you so much for making the time to join us. Of course, exciting news here. This is the first exclusively ICT infrastructure fund that we've been seeing set up on the African continent. What is the gap or the challenge that the fund is responding to?
Thanks, Nazipo. I mean, if you look at the African story around ICT, there's a massive infrastructure deficit. And by that I mean there's a significant amount of capital that needs to be deployed to get the African continent to the same level as, say, the rest of the world. The current estimates are something like $20 billion per year needs to be spent just on ICT infrastructure over the next 10 years to get Africa to start bridging the so-called digital divide. And part of the challenge really is not just the spend, but the nature of the continent itself. So it's a vast area with pockets of population. There's still a significantly rural population. So laying infrastructure across the African continent is much more expensive than elsewhere in the world. And I think that's a fact that's often missed by people. So it's much more expensive to lay an equivalent infrastructure in Africa as opposed to elsewhere. And that pushes the cost. And then the operating costs in Africa is also much higher through things like power management and security issues and remote sites and the like. So it's an expensive piece of infrastructure that needs to be built. And right now what we're seeing is that predominantly that spend was on the private operators' balance sheets. It is a liberalised sector, so by and large the government sector has stayed away from financing telco infrastructure in the main. And you're getting certain challenges in the market in terms of the ability for these operators to continue to finance the infrastructure layer, just in terms of competition and ARPUs coming down and the cost of reaching the net subscribers going up, and there's new regulatory framework and much more complex product sets, etc., etc.
But Brandon, it seems as if despite these challenges that you list, you've had some significant traction in terms of commitments that have been made to the fund. You've set a target of $250 million US. You've raised 145 to date. Let's start off by looking at who's been involved and how you are planning to bridge the gap.
Okay, but maybe just to make it clear, the 145 really gets us to our first close target, so that allows us to start investing.
Right.
And then we'll continue to raise funding in the background, but we're open for business in this new fund as of now. The backers of the fund have been really the global development finance institutions. And the reason for that is I think it's becoming common cause the social and economic impact that telecommunications infrastructure has on the environment. So the World Bank through through its IFC arm, the European Investment Bank, CDC out of the UK, FMO out of Holland, DBSA here in South Africa, they're our backers for this first close. We're looking to go to a broader audience hereafter. And we ourselves, as sponsors, are also significant investors into our own fund.
Let's look at where you're actually going. The African continent, I'm sure, is an exciting space to be venturing into, where the opportunity to make a significant difference with a fund of this nature is evidently there. The countries that are top priority for you right now?
Yes, it's really not country specific, it's more regional. Because a lot of this infrastructure by its nature starts looking like it's cross-border. So if you look at the undersea fibre projects we've done in CECOM up till now, the New Dawn satellite joint venture that we had, these are very much pan-Africa or pan-regional pieces of infrastructure in the ecosystem. There are certain in-country opportunities we are, of course, looking at. The nature of the assets that we look for are more wholesale broadband, open access style networks, and they require a certain level of scale of consumption. So initially it will predominantly be the larger economies, so Nigeria, Ghana, Kenya, South Africa. Although increasingly we're starting to see opportunities in the slightly smaller economies as the rapid uptake of smartphones, broadband, data services starts to unfold.
From a policy perspective, are you finding that the governments are making the right policy decisions to enable a fund of this nature to truly unlock the opportunity that you're working on here?
It's a very good question. I mean, it is a little bit fragmented, so you can't say there's a sort of homogenous approach across the entire continent on this. But I think policymakers by and large are starting to recognize the benefits of ICT deployment in terms of economic impact. There's this often quoted World Bank stat of a 10% increase in broadband penetration translates to a 1.4% odd increase in GDP in less developed environments, which is obviously the environments we operate in. So there's a realization that there's a need to create friendly policy frameworks to enable this to happen. The difficulty for governments really is because it's a liberalised sector, there's a limit to the policy tools that they have at hand. So it's things like spectrum allocation and general policy around liberalisation of ownership of the backbone infrastructure. But our discussions have been very encouraging, and the moves that we're seeing from governments, policymakers, regulators is all very encouraging to help stimulate spend in the environment. Part of the big push is to try and drive a process of shared infrastructure. Shared infrastructure from an economies of scale point of view to reach more rural population, to reach proper services into the needy environments is a critical aspect that needs to really be addressed by policymakers.
Brandon, thank you so much for making the time to join us, and congratulations again on the